Hi, I'm Mike Litton, and this is your market update. So just to recap from last week, or last month actually, but we talked about it last week. New listings were up 0.8%, sales were down 2.3%, median home price was at 1.043900. Average sales price was 1,439,875, which, like we talked about, was a reflection of interest rates dropping a little bit. We're talking about that in a little bit because they just ticked back up. Percentage of price received is up to 100.1%. So if you had $1 million listing, for instance, your average that you received as the seller that you closed on was actually 1,100,000. So housing affordability index is 16.1, so it was down down 16.1%. Month of supply was up 7.7 to 1.4 months. And there's the year interest rate. If you remember, that's the peak, right, from the 80s. And then that's the one from last year. So the one previous was actually, I apologize. The one previous was 50 years, 50-year graph. That's the year graph. And then this is the current graph. So this is what interest rates look like now. National average 7.11. In San Diego, FHA, VA rates are 6.25. We'll talk about that. They're up from 5.99 last week. With a APR of 6.47. So here's the weekly snapshot. So number of homes on the market is up 2.85% to 3,207. Now this is countywide, San Diego County. 920. The new listings are down by 12% to 920. This is kind of a temporary lull, but there was also this tick up in interest rates. And so people might be holding tight to see what happens with interest rates. Federal Open Market Committee meets tomorrow, which is the determiner inside the Fed. That's the body inside the Fed that determines that determines monetary policy. And so they'll be meeting tomorrow, and we'll get minutes tomorrow from that meeting. And we're going to talk about the one thing we talked about a couple weeks ago is we talked about the long side of the market. So 15-year, 20-year and 30-year fixed rates, and that was those were being manipulated, if you will, by the balance sheet. We're going to talk about that in a second as balance sheets dropped. So consumer sentiment, if you remember, these numbers are decades better. So they're really, really high, and that's a good thing for real estate, right? The chances of the Fed cutting interest rates in May have gone to 32% as of yesterday, 50.1% in June, and then 46.4% in July. So the belief is that the Fed is still going to cut interest rates, or at least this is what the street is saying. The street's saying that the Fed's still going to cut interest rates. It's going to be 3 times this year, but it'll be later, not before the first half. So not before June is what they're saying, basically. And then the Fed and long-term rates, we talked about this the other day, is a thing they called quantitative easing. What they're doing right now is something that's called quantitative tightening, where they're actually letting the balance sheet continue to reduce. The reason that's important is we're going to get more guidance tomorrow in terms of what they're doing with this balance sheet reduction plan. They've now dropped it in the last couple of months. If you remember, it was 7.7 trillion. Now it's 7.5 trillion as of a couple of days ago. So it's down $200 billion. Now they're not necessarily selling securities. What they're doing is letting the securities mature. So once those securities have matured, and we're talking about treasuries and mortgage-backed securities, once those have actually matured, they're just letting them mature. They're not buying anymore. So they're adding more supply to the market. That supply to the market basically drops the price, if you will. More supply drops the price of whatever the commodity is. In this case, it's bonds. And so you drop the price. When you drop the price, the yield goes up. So remember, it's inverted, right? When the price goes up, the yield drops. Okay, so right now the price is going down and the yields are going up, and that's why you're seeing an uptick in 30-year, 15-year, and 20-year fixed rates. So we're going to get more guidance tomorrow after the Fed releases their minutes from the Federal Open Market Committee with regard to what their plans are in the near future with regard to long-term interest rates. Okay, so we'll be watching that closely. We'll report back to you. That's the graph of the current balance sheet. We talked about being solution-based when you're answering questions on camera. Like I said, FHA and VA are 6.25 with a APR of 6.47. We wanted to thank you again for all your support with the Mike Litton experience. We're over 116,000 views, over 50,000 downloads, and we're now in 32 countries worldwide. So from the bottom of our hearts, thank you so much for all of your support. If you'd like to follow us on social media, we're at Litton Realty on Twitter, Instagram, TikTok, Facebook. And if you want to meet with me, you're more than welcome to. It's calendly.com. I'm blocking it. Sorry. It's calendly.com /REO760. And you can book a time to meet with me. No obligation, no cost, none of that. Just answer any questions that you have. There are no questions that you cannot ask. So you're more than welcome to reach out to me at 760-522-1227. 760-522-1227. What I would suggest is text me ahead of time and we can arrange a time or go on Calendly and we can arrange a time to talk. Hope you have a wonderful week, and we'll be back with you next week to update you on what the Federal Open Market Committee and the Fed decides to do with interest rates. Take it easy.